This conference will now be recorded.
All right, now welcome to this week's edition of Traders Exchange. As always, everything that we're going to be talking about today is for educational purposes only, and nothing is intended as any type of investment advice. All right, so very interesting morning. I know I missed the record day yesterday, but at the same time, coming back, I was pleasantly surprised compared to what we had going on in the pre-market. I mean, the pre-market looked like we just weren't going to ever see any type of trading again, but we ended up getting some really good moves out there. And the measure of a day, as you guys know, I don't really care whatsoever about what goes on in the market. I really don't. Now, can I predict it based off of what most of the market stocks are doing? Of course, but that doesn't really mean much, because you could have the biggest day in the world but not really see any type of quality trades that go on out there. And what it comes down to, it's not really as important as how much the market moves. It really comes down to what how many high percentage trades we have going on out there. And this morning we certainly had a whole bunch, and most of them followed the rules almost to the T. Absolutely perfect. So I want to talk about two things before we get into questions, and one of them is going to be how we can trade these cheaper type stocks. All right, and we're going to talk about Watt a whole bunch. Now, I missed a large portion of Watt because it pretty much died out around that 750, and then it started to run as I was eating lunch before I started to talk. But I told you guys the second that I was going to leave that we were going to start to see some good moves come out there. But I want to talk to you a little bit about how to look and trade these cheaper stocks coming in, and then we're going to hit Apple real hard, because I know everyone's been watching Apple, and it just gave us pretty much one of the best show of hands that we could possibly get, and we're going to go into that as well. So if I would certainly have a notepad out and ready, and let's get started. So what? These cheaper stocks, they have almost all the same personality, and these are actually by far my favorite stocks to trade. I've throughout pretty much since the beginning of me trading, and most of the reason that I started out trading these type of stocks, because I didn't have that much money when I first started. So you're really a cheaper stock for some reason, and it's funny how our minds kind of work, but for some reason we think that, especially with day trading, that a cheaper stock is a better because we have to put less money in. But we forget that at the same time that you have to, I mean, at the end of the day, losing 50 cents is losing 50 cents, okay? The cheaper the stock, it's not really going to make that much of a difference. But the reason I love these things is because you get these crazy moves that come into them. Now, we haven't seen as many, based off, I mean, a lot of trading lately, and I'm going to say probably the past 6 months or so, has been a lot of, the market stocks, or our name brands, because that's where most of the volume has been going in. A lot of the volume has been sitting on the sidelines because the world that we kind of live in right at this moment is a little bit crazy. All right, so a lot of the volume has been going into the more name brand type of stocks, but when these come up, it's very easy to take advantage of them. So let's talk about Watt this morning in the pre-market, okay? If you didn't get to see the morning meeting, it is on our YouTube channel. It always will be. All right, and what it showed us is as we were coming back up. So when we see something like this, okay, if you listen to the morning meeting, you'll see that I talked about it has all the variables that it needs. And a stock that's this cheap, really all it needs volume. Okay, the volume wasn't great, but there was no trading going on this morning whatsoever. And as I'm talking, guys, we just got more ask prints at 9. Looks like this thing's going to try to make a run at 10, but we'll talk about that later. But overall, what we need, the number one thing, is the volume trading. All right, now when you have a cheaper stock like this, having no volume at certain periods of time is not a bad thing whatsoever. Because when you have no volume, it gives you a really good idea of what the stock is looking to do. Because if there's no volume, what is the most common thought process when a stock gets into low volume for a retail trader or even a market maker to come out and do? Now, when I say market maker, I'm not talking about a real market maker, because the real market maker, the dominant market maker within the stock, is they already know where they're bringing this stock to. They already know what's going to happen. That's how the assumption that we have to make. All right, but I'm talking about bigger money, coming in based off, because most of the time the news is going to be, there's got to be some type of news in these cheaper stocks, and that's what the catalyst is going to be. But they already pretty much have an exact idea of where they're going to be looking the stock to go. So what's the number one thought process when a stock goes into low volume for somebody that's in a trade? What do we look to do? Or what are most people out there going to do? So we have a position. stock goes into lower volume, what happens? Okay, to a very high percentage of the time. And right now we don't need the print, so we'll sit here. But what is a trader out there going to do? Well, so that's the thing. Consolidation, okay, is not it. Yes, it's going to go into consolidation if no one's doing anything. But I'm talking more about the end of the consolidation. So we come towards, where when a stock is going to break out of consolidation or it starts to go into lower volume, what's the first thought process? There we go, sell. We're going to sell. That is everyone. When a stock stops moving and you have a profit, okay, the first thing that comes into your mind is going to be to sell. It's human nature. That's what most people do. So when we look at a cheaper stock like this, think about it. If we come back over here to the daily and we look at exactly what's going on in Watt, okay, Watt before yesterday, if we look at, zoom in a little bit, and we look at the low from yesterday, this stock was at 441. So when the stock opens up overnight and we look at the open here and we can see it was at 603, what's the first thing that someone's going to do? Okay, so you're talking, a substantial amount. Yeah, they're going to end up coming, and thinking to get out. That's just, it is what it is. These cheaper stocks, remember, a lot of times they get their 10 minutes of fame, 5 minutes, 15, whatever, however minutes of fame you want to put, and we end up not seeing them move anymore. It just got more prints at 9, by the way. So we're getting really nice new buying that's coming into this, just for anyone that's still looking straight. No, we did not talk about Apple yet. Apple will be coming after. All right. All right, so when we come into that, that's the first thing. Remember, low volume breeds fear. Okay, low volume also equals fear, because what's the only reason? If I told every single one of you right now that this stock is going to 10 guaranteed, are any of you going to sit on the sidelines? If you know the stock is about to go to 10 right now, are you going to be sitting on the sidelines? No, of course not. You're going to take whatever money, you decide based off of what your current situation is, and you're going to end up getting into that trade. And this is something that we have to remember. So one of the number one variables I look at what these cheaper stocks, what it does at low volume. Because Apple, 90% of people that are trading Apple, do you think they're trading, and I'm talking about retail at this point, but 90% of people that are trading Apple, do you think they're day trading it or do you think they're investing in it? When you see retail going off, what do you think they're doing? Most people, yeah, it's going to be an investment. So when it starts to get that low volume, it's not the same as a cheaper stock. It doesn't act the same. It really kind of just when the lower volume comes in, it doesn't tell you as much as these cheaper stocks are. Okay, when these cheaper stocks start to move, do you think anyone that's watching CNBC doesn't know about it? And forget the people that are already in. No, every person out there, every retail trader out there, it's the hot stock of the day. Okay, I'm sure if I turned on one of the financial channels within the next 30 minutes, we're going to hear something coming in about what. So one of the number one things during the pre-market especially I look to see what it does in low volume periods. So we see the stock coming back over here. We can see this nice big spike, and we came up on a little bit, but you could see it was very broken up. And when we started getting that heavy volume coming in, when the volume came down, excuse me, we can see that it's still holding. So that variable right there, what that tells me is that first of all, what that tells me is that people aren't getting out. And when I say people, okay, the market makers aren't dropping it, because when low volume, okay, can a market maker sell if there's no orders out there to sell to and there's no buyers? So in the market, when it goes into these low volume dulls where we really see absolutely nothing happening, it's literally what it's telling us, excuse me, okay, is that people are still interested. They're not looking to drop the stock yet. Now, keep in mind, guys, the number one thing is always going to be prints. If there's no buying, is the stock ever going to stay there? Is it ever going to go up even if there's no buying here and the stock starts to pull back in low volume? Are we ever going to see? No, of course not. There's nowhere to go. If a market maker doesn't have to make money within the stock, so there's nothing that's going to happen. So number one thing you need the buying. You need the buy prints in it first to tell you that the stock has to go up. Okay, the next thing is that you have to look at that lower, when it happens at that lower volume, because it's always, the cheaper stocks are always going to take a break. There's no such thing as just consistent trading, always. at some point, I mean, look at the stock. Even though the stock is going up, and still continuing to go up. Oh my Lord! I swear to God, every time I start teaching, I mean, this trade couldn't have got any easier than it is. Okay, but even if you look at it here, see how we go into these dulls. Even as this stock has now moved from basically six where we saw that buying during the pre-market, all the way up to almost 950 at this point. If you look at, it's still going to have points. So what we want to do is we want to see what happens during these lower volume times. It's invaluable information to show us what their expectations are going to be. I took it. I would have too. Believe me. I mean, how much more buying do you want to see at 9? Okay, but so you have first, obviously, you need buying. Okay, and now most of the time you can't short these stocks. Okay, so I'm talking about all buying. If you can short it, it's going to be the same deal. It's just obviously you would have selling that shows you the stock is going to go down. All right. So first on the list is we need the buying to tell us it's going to go up. Second on the list is we want to see what it's going to do during that pre-market move. Now, the third thing that I look for is an immediate sell-off once the market opens. And when I say sell-off, I don't mean the stock goes down. A stock going down is fine. Basically, when a stock goes down, it tells us that there's more room towards that, that there's more money for us to make towards the upside when the market maker's going to have to make their money. All right, but I want to make sure that we don't get that and I'm talking about the second the market opens. I don't want to see the stock just get sold off, because guys, when that happens, what do we get? We get a big bar down and it's just all selling. What happens to that cheaper stock? Well, it's easy answer. The 15 minutes of fame is over. Okay, and there's not enough, because what that's telling us is that there's so much interest in just getting out of it because the stock went up to a certain point. The market maker's going to drop it. Now you might ask yourself, why don't they just drop it during the pre-market? Well, guess what? Is there enough volume in the pre-market to get out of a huge position? And when we say huge position, guys, remember this stock was $4 yesterday. Okay, $4 is a very cheap, is extremely cheap stock. So a large position in a $4 stock is going to be very different, and obviously the amount of shares that are available, the actual market cap within it, is going to have a huge effect on what the position is going to look like. That's just a given. But it's going to be a gigantic amount of shares, because it's not just the gigantic amount of money. You can't base it off money. You have to base it off shares, because when they look to take a position, okay, if you're going to build a position with $100 million, it's going to look different. And obviously, $100 million is a little bit of an exaggeration, but the amount of shares is going to be different on a $4 stock compared to a stock like Apple that at 150-ish. So we want to make sure that they do not just sell off their position. So why would they sell? How do they sell off their positions immediately? And what's the reason that they sell off the position? So every time I say something to you guys got to ask why. What's the reason behind it? So what do you think happens overnight? Everyone wakes up this morning. They see Watt because it was on the high percentage gainer. So we know everyone out there is looking for it. That's the reason we use the percentage gainers and the percentage losers, is because every single person out there looks at it. It comes with every platform, and it's literally almost, if you're looking to scan for a stock, it's going to be on almost every single person's watch list. All right, so we know that. So the second the market opens, what happens overnight? Now think of the mechanics of trading. All right, if you have TradeStation, it's a direct execution platform. I can trade as long as the market's open. I can trade anytime I want. Oh, actually, no, I think you can't trade past 8. I don't think you could trade until 8 o'clock in the morning, but either way, it's there's nothing going on before 8 anyway. But so let's say 8 o'clock in the morning comes, I can make a trade. Most people, what are they using? Are they using a direct execution platform? And by direct execution, I mean if I go put a limit order out there right this second, you will be able to see my order that's sitting out there. And not only see my order, but it immediately is going to the market. Okay, payment for order flow. There's a whole, we could go through the whole thing, but that's something for for another time. I don't want to get into that too much, but it's direct execution. What do most people do? So let's say I wake up this morning. Okay, I'm sitting at my table with my laptop because this is how I trade and I don't really know what I'm doing. Okay, what happens when I put my order out there? When's it actually going to get filled? How does that work? How does a trading desk in the morning? Exactly. They're trading via a broker, and that's the exact, and like I said, payment for order flow, direct execution, that's something for another time. Okay, but you do need to understand that, by the way. I mean, just to understand how trading goes. So what happens is Goldman Sachs, okay, their trading desk is going to walk in the morning, or they're probably, already there at, whatever time. But let's say they wake up in the morning. What's going to happen is they're going to have a ton of orders sitting on their desk. And obviously now, nowadays it's electronic and it's on the computer, but they have all these orders that they want to execute. The reason Goldman Sachs will never go out of business, the reason JP Morgan Chase, the reason that this will never happen is because people are trading from them. They already know what the retail market is going to do off the bat when the market is going to open, because they already placed their orders out there. So when the market opens, they have of all these orders that the trading desk is now going to start to execute. So if they know all these retail traders are out there looking to buy, the stock goes up $2 and it's not worth more than the amount the stock went up overnight, what are they going to do? What are they going to do, and when are they going to do it? Piles up until the open and lets loose. And exactly, and think about it. I mean, Goldman Sachs, you have to have $1 million account to trade with. So it's not going to be as much as like an E-Trade or something like that, or like a Schwab. I think Schwab does have direct execution as well, but that's besides the point. Most people are trading through their broker. Okay, so they put an order out there and it doesn't actually get filled until they fill it. Okay, it's not direct execution, as in if you basically, like back in the day, if you were sitting on the trading floor, being able to trade it instantly coming into there. So they know all these people are sitting there, and what's going to happen, okay, is they're going to sell it immediately because they know they have the orders now. So all the shares that they already had in inventory, remember, to be a market maker, you have to have shares on both the ask and bid. I think it's 100 shares on the ask and the bid. Okay, but they already have these shares in inventory, went up $2. They don't believe it should go up anymore. They're going to sell and hit those orders immediately because they know they're there. They already have the person to sell it to. It's like having a window into the future. It's like, imagine if all of you guys told me overnight, okay, what you were going to, or in the morning before the market opened, what you were going to do. Okay, so I already know I have the people to already sell it to. So we're gonna see it get hit in the morning. Now that's a lot different, and I want to show you what the chart looks like compared. So we see here, okay, was this an immediate sell-off like we usually see on a cheaper stock? Now this is the technical analysis part of it. Because remember, technical analysis is still important. It's not anything nothing is anything without prints, but it's still important. And that's a perfect way to put it. They have the answer to the test already. That's why these places, you'll never see them go out of business. All right? So now the technical analysis part. If this was going to sell off immediately upon the open, would it be a sell-off or would it look like consolidation? All right, if we look at it, we sit right here and we look at it, okay? We know it's in a consolidation. This isn't just a sell-off. Okay, and what a beautiful pattern do we have right here? What pattern do we see right here in WATT that we talk about all the time? Yep, we have that stair-step pattern. That happens it's like clockwork. We see them constantly come back up there. Now, a stair-step pattern without buying is nothing. But when we have the buying that we had this morning. So what did I tell you guys this morning? In our morning meeting, the only thing we needed to look at, because these cheaper stocks, guys, sometimes you'll get buying in them and nothing happens. Okay, you'll see the buying, and it's not that they don't follow the rules, but a lot of people, it's almost like kind of a gamble. And these should, because a lot of these companies, I mean, I never, any stock under $5, you probably don't know much about them. I mean, unless obviously you're following one thing and looking at it. Okay, but what it shows is that with these cheaper stocks, when you have the buying there, all we needed was one thing. And I said this. There was one thing that we needed, and the print line is actually gone right now. okay, because the 930 print line came in and took over. The print line was there, but it needed one thing, and there was one number that you needed to look at. What was the number? There we go, 613. 6 trigger above 613, and it was a trade, right? So we see the stock, the second number right before the market opened, because for some reason these bars are, oh no, 931. So this is the first bar. Okay, all we needed was that stock to come back in, and we saw that as soon as it jumped up in the morning, it ended up going to that staircase pattern. Okay, right here was the easiest trigger you possibly could have had, because if you look, it comes up, and our high is 626. Okay, so what had to happen? I know a lot of you guys took this trade this morning, but all we needed was that trigger up. Okay, and the trigger up was not, the trigger up can't take long. Now, don't get me wrong. Could this stock have just, kind of went lower and then all of a sudden out of nowhere come popping back up? Of course it could. But that's not what the trade that we're looking for. What we want to look for is in these cheaper stocks is the high percentage that makes sense with exactly how the market makers are going to work. Anytime you see something that happens to over and over again, you have to come in. You have to ask why. What's the reason behind this? Why do market makers sell off right at the beginning of the market? Well, guess what? We know that now. Or everyone, obviously, if you were listening, you know that now. Okay, it's because they already have the answers to the test of what's going to happen. They already know the people that they can sell their inventory to. So when we don't see that happen, what that's telling us is it's one of two things. Now, number one, it's either not enough people were buying, or there's not enough buy orders that were coming in, buy orders to come in there for them to sell to, which we know based off the volume and the amount of orders that were out there, that's not the case. Or number two, that the stock is going up. Okay, it's going to eventually go back up, and look what ended up happening. Now, yeah, and then at 650, we got a bunch more aspirins right now. Excuse me, guys, I have a cold. All right, but right now we can look, it's pulling back from those prints at 9. The aspirins that we had at 9, remember, this is a cheaper stock, 50 cents, so we pulled back, 50 cent move up, but we still have aspirins that are sitting at this 9. The stock still wants to go higher, but if you guys want to understand, we talked about this last week in our last Traders Exchange. You guys asked me about the market and any tips I could give you in the beginning of the market, to tell you, how to look at a trade, and this is it. With these cheaper stocks, those are the only factors I pay attention to. One thing you all are going to notice, I don't care if this is your first day here or you've been here for months. One thing you guys are going to notice is everything I look for is very simple. Someone asked me a great question before, and a direct message. Okay, and they asked me, why don't I trade the SPY? And my answer was, I don't need to. Okay, there's too many other things out there, and you can only focus on so many things at once, but I don't need to. Why would I try to go read the SPY? And guess what? I promise you, if I sat there and watched the SPY, I could trade it. I guarantee you. If you know how to read prints, you could trade literally anything. But why would I go out there and try to trade something that trades around 200 or 150 million or 200 million? I don't even know what it's up to now. It could be higher than that. It could be lower than that. I literally never even pull it up, when all I have to do is look at the market stocks. Now, I could have told you to short the SPY, guys. I told you that the market was going down, right? But it was all based off of Apple and NVDA and these tech and market type stocks. Because if you see that, what's easier to read? A stock that's trading, if we look at Apple right now. So you tell me, what's easier to trade? We look at Apple, and I'm going to pull up the SPY for the first time in a while, okay? But Apple trades 46 million on average, okay? And then let's look at the SPY. SPY trades 150 million on average. Which one's going to be easier to read the prints on? Which one is going to be easier for us to read the prints? Apple by far. And you want to see something that's really funny, guys? That's really funny. And don't get me wrong, Apple's some of the best market makers out there are in Apple. But the average that SPY moves is $4.80. You want to see something that's real funny? Apple moves $5.55. It moves more than the SPY. What in the world would I be paying attention to the SPY for? You guys understand? Do you see why it just does? There's no reason in the world to do it. Now, don't get me wrong. Okay, the SPY can have really big days, right? Okay, so Apple's high is 1360. The SPY is 12 and change. So do you see right now why I don't trade the SPY? Would it make any sense for me to do that? Nope, absolutely not. And that's, back to my original, that's just my, my keep it simple point. But guess what? Trading is hard enough on its own. There's no reason that we have to try to make things harder. Unless you want to say like, I could read the SPY, but guess what? I have no ego. I don't give a shit. I'll take the easiest stock over a harder stock any day of the world. I get no satisfaction on trying, going out there and trying to trade something harder. Okay. At the end of the day, our only goal is to make money. I asked that question. Okay, I wasn't going to put anyone's name out there, but there we go. Money man. That's why you asked the question. And that's the reason I don't do it. It's because to keep it simple. The only reason, guys, that we trade, don't get me wrong, I really do, someone that's not even close to a Harvard educated type. Okay, I do get pleasure about taking people, to follow, the market makers and understanding their game plans. I do get pleasure out of that. That's one of my favorite parts of trading. But guess what? If the market maker is too smart for me, I have no ego. I'm not going to try to fight with them. I'm going to go out there. I'm going to find one that's dumb or that's not as smart, and I'm going to go out there and trade with it. So what I look for within every type of my methodology and every type of way that I trade, what I look for is the easiest way to know what's going to happen. All right. Now, overall, don't get me wrong. We talk about how many variables there are, okay, out there, but that comes a lot with screen time. Okay, the stock doesn't need 100 variables to be traded, but at the same time, 100 variables that follow what you're saying, okay, and follows what the market makers prints show certainly gives you a higher percentage trade. That's where we get our 95 to 99% trades that come back out there. Okay, so just to recap. First thing we need is prints. Okay, in this case, the cheaper stocks, we're going to need the buying. Number two is I want to see what it's doing on the low volume. Okay, and remember, when I say low volume, I want to see what it's doing is I want to see what the reaction to that low volume is. Okay, one of the variables I'd love to look at on a cheaper stock is that it's holding on no volume, because that means people aren't selling off. Okay, so when it comes out of that lower volume, you get like a bigger volume bar. If it still holds within that consolidation, that is a great variable that puts it towards the trade. And then after that, I want to make sure that at the open, they don't sell off. And at that point, guys, all I need is a trigger. You give me a trigger. In this case, in WATT, okay, we had that print line at 613, which made it so much easier because 613 was the number that I needed the trigger to show us that it was going to go back over. Okay, so I did trade underneath 613, but I wanted to see that trigger towards that 613. We knew someone had a lot of shares that was sitting there. So overall, guys, there was really only about 4 things within that trade that made it a absolutely perfect trade. Trigger down. I'm not watching Apple. Guy, when I teach, I can't do both at the same time. I have no idea. But that's a question for the trade room. Can you say those things again? I told you to grab a pad, but yes. Okay, so number one is we need the buy prints. Okay, if a cheaper stock doesn't have the buying, it has nothing. So if we don't have buying in it and it just looks good in this volume trading, doesn't mean a thing. Without buying, we cannot do anything. Number two is we want to see what it does during the low volume points. And we're talking about the pre-market right here. Now, don't get me wrong. It's the same principle, same exact thing during the regular market. It's just easier to see in the pre-market because there's less volume that's trading out there. But I want to see what it does during the low volume lows. If it holds during that consolidation in low volume, it's a great sign that they're not looking to drop the stock. Okay. Number three is I want to see that when the market opens, so literally the minute the market opens, if they sell off. And then number four, all you need is a trigger. a trigger up. In this case, guys, they were selling above 6. There wasn't anything at 6. They were selling above 6, but we had that print line at 613, which just gave us, a great. If we get a trigger towards that print line, most certainly we could tell was buying. Remember those bigger prints. I don't in any way ever look at direction. What I do is I figure out the direction based off what I see, the variables that add to it. But obviously, okay, if you get a trigger towards a big print line in a cheaper stock, and remember, you don't get many print lines in these cheaper stocks. Okay, that print line was 99.9%. If you got that trigger that was coming back up, was going to be a buying print line, which told us obviously the stock's, someone's looking for the stock to go up big. A lot of selling. How would that affect this getting back over 9, or was that buying satisfied? You know what? At this point in time, remember what I said. I mean, the buying at 9, it made its money. 50 cents is what we look for in these cheaper stocks. Okay, it's 50 cents is from when you get prints. So at this point, guys, it's satisfied. These cheaper stocks are not always going to follow the rules perfectly. I mean, they're kind of like the wild card. Okay, so what you have to do is you have to look for, for a certain point. Remember, 10. What does 10 mean for a cheap stock? What does the number 10 mean for a cheap? Yeah, that is an absolutely huge psychological level. So getting to 10 and breaking 10 for a stock. Remember what we talked about, guys, about the parties that they throw at the companies? So there's a few different parties that happen, or there's also layoffs that happen. But no, but there's a few different parties that happen. If your stock is $1 or $2 or $3, okay, what do you think happens when the stock gets to 10? Well, I can guarantee you that company, they're throwing a party. Okay, that is a huge moment in their life. 50 is another really big one. To break 50 is a huge spot to break. 100, they hit triple digits. It's a huge point. So because it's so huge to do it, what do you think happens at those levels? What do you think happens at those levels if it's so huge for a stock to actually be able to do it? Yeah, it's a big resistance because it's so hard to do. Okay, most people, if you own the stock at, let's say, 50 cents, okay, what do you think you're going to do at underneath 10? 10 is going to be a big spot to break. Most people are going to sell it. That's how the human nature works. That's why I tell you guys all the time, I don't read many trading books, but I do read a lot of psychology stuff. Okay, and it doesn't even have to be books, just anything on psychology that's from, an actual credible source. Don't just read, Facebook posts or something like that. But anything from a credible source, I read into. Because understanding the human mind, guess what? Retail are all, and I don't want to say it like this, but I mean, actually, I don't really even care. Retail are all sheep. They're all sheep. Someone at Christmas, one of my family members asked me about Kramer and about Mad Money and said, "Do you watch Mad Money?" I literally just started laughing hysterically. Because if that's where you're getting your ability to trade off of and your trade ideas, then you're going to have a really bad time with your account. You're going to be part of the 90%. And you can't, and retail, they're all sheep. So if you understand what the basic psychology of a person is, you know what 90% of the people out there are going to do in any given situation, because 90% of the people out there are the same. Pritesh sent me an absolutely phenomenal picture before, and I'm going to read it right now. But it was from Warren Buffett, or I don't know, it was a meme, but it had Warren Buffett in it. It was something that somebody posted. Let's see. I don't keep my phone in my office up. Stock market is a device to transfer money from the impatient to the patient. Okay, 90% of people out there, and I tell you guys, how often do I write patience in the chat room? Okay, but we know that 90% of people, oh, that is his quote. Okay. please, we need more. We need them to get back in the market. But we know, if you look at any psychology book, 90% of people are impatient. We as a society now are into instant gratification. There's no such thing as people actually out there that have patience. And a lot of it has to, I was reading an interesting thing the other day. A lot of it has to do with the technology. There's literally there's stuff out there, all right, that lets us do something at all times. We don't want to wait at all. And guess what? I'm part of the problem. I'm impatient as well. I just know in every aspect of my life, I'm the most impatient person in the world. Okay, there's times where a friend asked me to pick them up, okay, and literally they weren't out there, and I waited 2 minutes and left. That's how impatient I am. Okay, because if if I'm on your time, guess what? That's you shouldn't leave people waiting there. But at the same time, when it comes to trading, guys, you have to build a robot type thought process. When a stock has to do something, I have all the time in the world, guys. I'm sitting here all day. What do I have to do that I can't just let the stock do it? Now, don't get me wrong. I would love for it to happen within 2 minutes, but it doesn't always work that way. All right, are we done? Everyone clear? Any questions on this? So if nothing else, okay, to take out of this, first of all, we need more sheep in 2019. Just make sure it's not you, because that's not, you don't want to be that person. And number two is exactly what to look for on cheaper stocks for be able to take a trade coming into the morning. Guys, did I know at any point that the stock was going to go to 10 or 950 in this case? Would I have ever known that? Would I play the drop? I would play the drop off of those 9 prints if I could short it. I don't even know if I could short it, to be honest with you. I'd have to put it in there. I didn't short it once today. But if I could short, I know it's hard to borrow, so I'm not sure. All right, guys, no questions? All good? Beautiful. All right, so let's go talk about Apple now. You know what? Actually, no, we're going to have to talk. Oh, man, I have questions that I need to answer. That took a little bit longer than I thought it was going to. All right, so what do we want to do? Davis, it's actually your question. So what do you want to do? You want to talk about Apple, or do you want me to do your questions? You get 100%. It's up to you. Because this is a question and answer. It's not a, talk about stocks, but up to you, Davis. Yeah, absolutely. Well, we did start a little bit late. I'm going to go till we started at 12:35. I literally say 12:30, but now, for everyone to get in, we'll go to 1:35. We have 20 minutes. So actually, we could do both of them. All right, can you explain how to interpret bid prints followed by ask prints or vice versa, and what you mean by first to the table? All right, so what do you mean by bid prints followed by ask prints? Okay, do you mean like what I just posted in the high percentage plays in Apple? Or do you mean like if there's bid and all in the same burst? Because Apple was a bid, but then ask came after it at a different price. Do you mean the same price, or do you mean the first price? Same price. All right, so basically it's first to the table, which means is that so a lot of times the prints are a little bit finicky because you have to remember technology isn't perfect. Okay, so what happens is that sometimes you'll see an order get hit, and for some reason, the way the data gets fed through, all right, you have the buying that immediately follows selling. So one of the reasons that first to the table is so important, I always take it as what the first prints were. Because what happens is that when it first hits that order, it has to. So the reason that I know this is because I see it hit the orders and do it sometimes, but it's always the first prints that actually came in. So if let's say we have 10 buy and 10 ask, all same price, all followed, same burst, that comes back into there. 99% of the time, and I'm gonna say 100% of the time, because I've never seen that happen when an order was hit. And that showed up. It wasn't an order being hit, but unfortunately, I don't see the orders every single time, obviously, because I can't watch I know every single stock that's coming back out there, but it's first to the table. So if you have 10 ask and we have 10 buy, 10 ask and 10 bid, okay, it's buying. That's 100% what I take it as. Because does it really matter? And that's a good, a good way to think about it. Because if it's buy and selling, what has to happen from all those 10 ask prints? It's got to pull back, right? So if it's got to pull back, even if it was selling after that, the person that came to the table first knows that the stock's got to go up, and then someone could have just came in afterwards to ride that pull back down before the stock actually moves back up. So no matter what, if I get 10 bid or 10 then 10 ask, it's selling. If I get 10 ask and then 10 bid, it's buying. Okay, that's 100% how to take it, and it follows that time after time. So first to the table basically means it was the first prints that we saw that were coming out to it. All right. There are cases when for the same burst, we see all three colors. The first of the purple, and then we're assuming all purple. Okay, when I see a level like that, I literally mark it down in my head as a level. I do not follow anything from it. Remember what we talked about before, keep it simple. When three colors happen at a level, is that ever going to be simple? Is that ever going to be, tell us definitive information? No, absolutely not. So at that point, I know someone's doing something at that level, but it has no effect on what I'm looking to do. Okay, you got to think about something, guys. Okay, when I put something in the high percentage trades, is it ever different colors? Does that ever happen? If you go back to every single high percentage play, which I actually look back, every one of them has worked, by the way. Just want to put that out there. But it's always one thing, because that's what makes it high percentage. There's no questions about it. Keeping it simple, trying to interpret three different colors at a level, I mean, you're literally, your guess is as good as mine. Now, can I give you probably a really good guess based off what I saw happening around it? I could, but I'm not going to. That's not how I'm going to trade ever. I'm always going to base things off being definitive. So what you might ask, well, what if I'm in the trade? If I'm in the trade, I don't really care. It doesn't affect me. Now, don't get me wrong. If it's bid and then purple and yellow, or bid then ask then purple, or something like that, I'm going to take it as sell prints. But if it starts with an above the ask or below the bid, I do not care. I literally ignore it, because there's nothing I can take out of it to a high percentage. And guys, believe me, I've tried. And now I'm not saying that that's exactly how it is. Everything I do is based off percentage from what I see. So when I see that, sometimes it goes up, sometimes it goes down. There's no real information. There's nothing to a high percentage that I can tell you this is what happens. And if I can't tell you that something happens to a high percentage most of the time, I can't trade it. If I can't trade it, I ignore it. That's simple. All right. So I've been consistently winning trades, and I've been consistently winning trades. Well, that's a great sentence, great start to your sentence. And culling losers without delay, even better second part. But still leaving a lot of profit on the table. Yesterday was a perfect example. I bought Microsoft at the money call, sold for 30% profit. At the end of the day, the contract would have been 150% profit. Obviously, you're using shares, but do you have any suggestions on staying in these plays to see it throughout? All right, so options are a little bit different. So it all depends. So for instance, if let's say a stock moves $10 in a day, I will not make one trade that makes $10. Okay, because if you get, for instance, if it comes in, let's say for I don't know, let's just say a stock's at $1, okay, and it moves up to $10. So that moves now, or moves up to $11. So it moves $10. Okay, I'm going to make several trades throughout that time period, because of the fact it's not worth me to lose 50 cents of profit when I can just get back in when it has great prints. Okay, but so in this case, we're going to use selling because the market is pretty, or actually you just for yesterday's case, so we'll use buying. But what happens is you got to make sure, okay, that you just consistently are seeing new buying. Now, if you're holding it as a day trade, remember, there's a day trade is a different way of going about things. Okay, you have to take what you see coming into there. Well, let's say you get into Microsoft at, I don't know, I'm making up a number. Let's say 100. Okay, and this stock, you see great buying at 101. Well, if you're holding that, there's no reason to get out. You know there's new buying, you know that person has to make money. Now, if you see a ton of buying, then you have to get out because it's going to be based off of your percentage. See, unfortunately, I wasn't here yesterday, so I really wish I could give you a better answer. But the best answer by far is always leave a runner. If you see new buying and you have to get out, leave a contract. Leave 2 contracts or whatever amount that you're looking for. Matt S. actually just said this, looking at the chat. But yeah, leave a runner. If you still continue to see buying, there's nothing wrong with locking in 30% of profit, but leave that money sitting there. I almost always leave a runner. The only thing I don't leave runners on are these cheaper. Well, actually, it depends the situation. I mean, once again, it's going to be the situation. It's going to be based off what the prints that you saw going on out there. Watt was a good example today too. That's why I'm trying to do with multiple contracts. Yeah, but leave a runner. So it really depends on what the stock is showing you. Like for instance, in Apple, which we'll talk about Apple in a second. Let's see. Well, okay. I'm gonna answer your question with Apple. I want to answer your last one as well. All right. If you're always away from trading for a while, what are there best practices for getting back into the swing of things, catching up on stories, or should traders just take their time to get the sense of the market before jumping back in? All right. So, like for instance, I'm gonna be gone for a week. Next week, as most of you know, I will not be here at all. I will not be answering questions. I will not be anywhere. That's my new rule is every quarter, a week off. All right. But going into things, okay, all you do is just start over again. But I'm going to tell you what the best way to understand is. Guess what tool you have? Oh, there you go. The chat. Go into the chat and ask what was happening. Now, if you're not looking at prints and you ask every single print, you know what? Sometimes you might not get an answer. I always do if I'm watching it and if I see it. But anything that's worth watching, guys, we'll know. The chat will know. Somebody in there will be seeing it. So use the chat to your advantage. See, you don't even need to use the search bar. All you need to do is go the search bar. So the search bar is great if you know what stock you're looking for. But if you come back, okay, let's say after the week, guess what I'm going to be doing on Sunday night, guys? Because I'm not going to look at the market once. I say that, but we'll see what happens. But I'm not going to look at the market once. So guess what? I'm just going to go read, maybe a day or two of the chat the night before on Sunday night before I come back in, because that's going to give me it's going to show me what you guys were looking at. And if it's worth going and looking at it, and putting into the chat, it's worth me. It's worth an hour of my time to read the chat. Everyone wants everything handed to them. That's not how it works. You got to put the work in. And I don't mean you guys, everyone. I mean just as human nature. Put the work in. Even let's say it takes me 2-3 hours. Okay, let's say it takes me 3 hours. Okay, Sunday night to go back and read 2-3 days of the chat. You know what? The one piece of information that I make my first trade on Monday, how much I'm going to get paid from that? So the 3 hours, that one trade, is going to be worth it. So that's my best piece of advice for you, is to go and put the actual work in. All right. Let's talk about Apple now. I know you guys are waiting. Just give me 1 second. All right. Can we revisit the strategy? Some people can't do multiple trades per day because of day trading. Yeah, but you get, again, if you have Traders Exchange, guys, I do it every week. I could have canceled it this way. Well, next week we will not be doing it, but I could have canceled. If you have questions like I ask for every single day, put them in the chat. Send me an email. I'll be happy to spend time the entire Traders Exchange if it's a good, if it's a long question in there. But when we have 8 minutes left, then that's to go into that. Can we I'm totally close. Just yeah. So revisit what strategy, just out of curiosity, as I pull up Apple. I'll put Natesh's phone number in. You can call him on nights and weekends. All right, so let's go to high percentage, please, for a second, because I know everyone's curious about Apple. If I can get it in here. All right. So can everyone see that? What we just saw here? So ingrain this into your mind, because I can't keep it up. I have to go to the Apple chart. But so we have a whole bunch of prints at 151. Guys, these 4 ask prints right above the ask prints right there, do they matter? Is that selling, or are those above the ask prints? Selling. All selling. And then we have these ask prints that come in, and that bond that came in. Excuse me. Oh, man, I hope my week isn't spent trying to recover from a cold. All right, so now we come over to Apple. So we know we have, I don't know how many there are, maybe 15, give or take, sell prints at that 151 level. And then we have, give or take, maybe 10 buying that came in at 151.28. All right, so how are we going to play this? So number one, let's just talk about perfect case scenarios. So based off the sell prints at 151, how much does it have to move? And it was at 1228. So that would be 1229, I think, on this. How much at a minimum does it have to move? And by move, I mean pull up. Well, actually, let me ask you a better question first, because you guys are going to tell me how to trade this. Okay, let me ask you a better question. Are they short-term or long-term? Shorter-term prints or longer-term prints? Long-term, by far. I mean, there's no question there. 100% are going to be longer-term prints. There's too many of them to come. Well, you got to think, Apple until like recently doesn't print that crazy at levels. That's an order being hit at that 151. Okay, so that's definitely long-term, not short-term. Okay, just because the stock is coming down right now does not make those short-term. All right, so start with $1 on a pull-up, right? Okay, does Apple only pull up $1 on long-term prints? No, absolutely not. We could start there, because guess what? I sure as hell would have taken this trigger down on this short. But if you're looking for, okay, there's two. Remember what we talked about when we're talking about what type of strategy you're using. You have to use the prints that fit what you're looking to do. Is in any way whatsoever the $1 that this stock pulled up enough for the amount of prints that we saw there? No, absolutely not. No way $1. But right now, if you look at Apple, I mean, the trend is just down. I mean, it's a huge downtrend. It's going to be it's a lot harder for it to go up than it is for it to go down right this end. Is it safe to look at the average moving as a benchmark of the pull-up, considering the prints? Safe to look at the average move. I'm not sure what you mean by that. You mean average range, Robert? Yeah, I mean, that's not a bad place to start, but the way that I really look at it is I look at how a stock trades with its levels. Okay, Apple moves in $2.50 and $5. So guess where my first point I'm going to be looking at is? Guess what number my first spot of pull-up is? So if I'm trading, day trading, which obviously I am, this is perfect. Trigger down, perfect. If I'm looking to actually trade Apple overnight, what number do I need to hit? Yeah, 152.50-ish in that area. Now, how will I know if 152.50 is the right spot? How will I know that? How did we know that Apple was going to have a huge pull-up? Yeah, it's the prints at 152.50. That's what's going to tell me, do we need to continue more? Because what's the dominant market maker in Apple? What price and what direction? Everyone that's looking to trade Apple should be able to answer this question for me right this second. Who is the dominant market maker? Where are they? And what price? There we go. Matt, I'm gonna actually one's far away from zero, but 150 and short. 100% is the dominant market maker in this stock. You guys asked me this morning if I thought the down movement was enough, okay, for it to move $4 down from that person, and I told you no, because it's not. There's no way that the amount of selling that we saw in Apple was going to be for $4, especially the amount of selling that we got at one. We did get great selling at 151, Matt, too. So don't you're not 100% wrong, but the dominant market maker is at 150. What if we have the same prints at 151 as we do at 150? Who's the dominant market maker? How do we know how much they need to make? Well, that's a lot is based off screen time and understanding and classes. We're going to talk a lot about that in classes, about high percentages. Remember, guys, I'm not going to be here next week, so I'm not going to be able to remind anybody, but classes are starting the day I get, the Tuesday that I get back. So it is, the date of classes are going to be Monday, January 7th. Okay, because it has a lot to do with averages. There's a whole bunch to go into, and we're about. But I'm going to finish Apple, but we're about to be finished. That's a long question. All right, so Apple right now, until the stock goes to 150.250, if you were to look to trade this to the downside, can you trade it until it hits that mark? Can you trade it until it gets to that mark? You could trade it, day trade it, but if you're looking to trade the overall move, the stock now has to pull up. Just because the stock, we know where the stock is going, but it doesn't mean it gives us a trade. If you're looking to do an overnight options type play, the stock has to be perfect. It has to do exactly what your expectations were. For instance, on Monday, guys, we started to see Apple go down, right? And everyone's like, oh, doesn't mean you can't make money on it. Okay, I don't trade, overnights like that. Doesn't mean that you can't make money on it. Okay, because the stock can go down a bunch first, but overall it had to come up. It had to give us that big pull up. And guys, did we not get it yesterday? Did Apple not give us that big pull up to 155-ish? That we were looking at 155. It ended up going higher than that. But did it not give us our big pull up? Apple's a stock that's traded every single day, so it's 99.9% always going to follow its rules at some point before the overall move happens. Okay, just like it did when we saw the first overall move. So it gave us our pull-up. Now, right now, the next thing that you want to look at the range. What's the range in Apple? Can we expect another pull-up? Based off those prints, I'm looking for one. 100%, Camille. I'm looking for another big pull-up like that from those prints. Okay, really what I'd be looking for is somewhere around 154-ish. Okay, but remember, I'm a conservative guy. I'm a real simpleton. Okay, I'm going to start with 152.50. That's just what I'm going to do. Would you say it's a high percentage play to go long overnight? Absolutely not. And why not, guys? What did I spend an hour on last week? Would I say it's a high percentage play to go long? Now, don't get me wrong. Would I? I might. But you're going against the market makers. You guys got to understand, going against the market maker, if you're day trading, a pull-up is one thing. But if you're looking to make overall trades based off following the prints, until you are literally, you're a level 5, 6, 7, 8, 9, 10 trader. Well, no one's ever going to be a 10 trader, but because there's always more something to learn. Okay, by going long, you're not following a market maker. What you're doing is you're playing the move off of that actual market maker, which is a terrible idea. Now, as a long day trade, I have no problem with that. If we get volume to the upside, guys, look at its range. Right now, Apple 528, it usually trades 555. I'm perfect. I'm great with a long trade because look at the volume. Volume's pretty low for today. Today's a low volume day. When we looked at the SPY before, it looked disgusting. So I'm perfectly fine with that. Now, would I trade this right now? No, it's absolute garbage. There's nothing I would do right now. Okay, I'll be patient and wait for the overall. Keep doing that, and you add to the 90%. And that's exactly what it is. If you're looking to make an overall, remember, day trading, I play pull-ups and pull-downs constantly. I love them. Okay, because they usually happen quicker than the actual move does. You get a huge amount of prints. You usually see that move almost immediately end up coming back down. So I'm in love with those type of prints. But the thing is that you have to look at the overall move. Guys, is the overall move buying or selling in Apple, down or up? Oh, absolutely down. You said you didn't trade those for years, so no, for literally, guys. You know what, Steve? Steve might know the actual date. I don't know if Steve's in here right now. I don't know if he's working or whatever. But literally, this I'm talking about, guys, for maybe a year ago, like within the past year or so. And I've been trading for almost 8 years now, and I didn't trade stuff like that until about 8 years ago. Okay, and you need to, so we know the overall moves down. So playing a stock up overnight, is that a high percentage play? There's a difference, something you have to understand. There's a difference between a stock going to move at a high percentage to an actual high percentage trade. So when you get huge sell prints, it's a high percentage the stock's going to move up because of that's just how stocks react. But that is not a high percentage trade because you're going against a market maker. You're doing the opposite of what a market maker just told you is going to happen to a stock. Technically, could Apple pull up 20 cents and then crash to 100? Could. The amount of selling we saw, sure as hell could. So we don't want to be caught in that. You want to play. Remember, with the whole point of everything I do, my entire methodology that I teach you guys is following smart money. All right. So by playing pull-ups, you're not following smart money. You're following the reaction of a stock to what smart money is doing the opposite of. Keep that in mind when you're taking your plays. And like, guess what? And like Pritesh said, you're going to be the 90%. Because the stock, when Apple broke down, okay, there were so many people that were upset about it because you're playing the opposite of the actual move. But guess what? I wasn't upset. I've been calling it for how long? How much this was going to break down. So you don't want, when the stock does what it's supposed to do, you don't want to be upset about it because that's what the 90% is. They're upset that they went the opposite way. Apple couldn't go down anymore. No, it couldn't go down anymore. But guess what happened? So until you're at a point, guys, and guess what? When I play pull-ups and pull-downs, so, they're most of the time I'm not in the trade as long as I am when it's a regular trade going towards the prints. Because I don't know how long, you got to remember, I don't know how long some market maker is going to build a position for. It could be 5 minutes, it could be 5 days, 5 weeks, 5 years. I don't know the answer to that. But what I can tell you is that when it triggers, that market maker is going to make money. I absolutely hate when people say it can't go down anymore. What the fuck does it? Oh, excuse me. I'm sorry. WTF does that mean? Yeah, I honestly, it's baffling because it could go down as long as there's selling. As long as there's selling, it can continue down. So I'm gonna have to edit that out. But exactly, that's how you can see my passion of how much I hate that. No, that's fine. But it's just it doesn't mean anything, guys. As long as there's new selling, what's going to happen to the stock? And we'll end on this note. But as long as there's new selling, what is going to happen to the stock? It sure as hell is. That makes so much sense now. Play where it's going, not what's going to do, if that makes sense. Well, it's not that it's what it's going to do. It's not. You don't play the movement. You play the position. We follow smart money. So if smart money's shorting the stock, we want to short it. We don't want to play a pull-up from them building a short position is the best way to come into it. Oh, that's 100% of what he means. I just want to make sure it's just clarified. Yeah, no, 100%. All right, guys, any other questions? We all good? No problem, Davis. And I know a lot of you, we did a free Traders Exchange today. So I'm actually going to just post this one on you. It will be on your Traders Exchange on your dashboard too, but I'm going to post this one on YouTube. Just wanted to, the little Christmas present for all the other traders out there that hopefully did not think Apple can't go down anymore, which is just not even close. All right, guys. So that is it. I'll talk to everyone in the chat room. And as always, happy trading.